We got some big news stories, some developing situations that will impact the price of gold and silver, will impact the markets. We need to talk about them. Let's get down to the basement right now. Everything is great. Everything's going to be okay. Just ask Tom Barklin and Loretta Mester, the two most recent Fed governors to give speeches proclaiming that everything is awesome in the economy. It's strong. We just have this inflation problem, but because the economy is so strong, we can take drastic measures to control inflation. That's killing silver and gold. So, are these two people right? Are Loretta and Tom telling the truth, or are maybe they wrong? Hey, let's look at some recent major news stories, plain evidence that might help us move to an educated, intelligent conclusion. Let's do that right now. So while these professionals at the Federal Reserve are telling us everything is awesome, when we look at these details, we might draw a conclusion to the contrary. First, let's take a look at the 10-year bond. It is at 3.13% as I'm filming this video. That is near a 10-year high. What's so important about that is higher interest rates kill the economy. They're killing real estate. But more importantly, small business, all these zombie companies that rely on rolling over financing to keep their operations alive are going to be decimated. Let me give you an easy example. Let's say that we have $100,000 in debt, okay? You and I are married. Sorry to draw that picture in your mind, but let's make believe we're a couple. We have $100,000 in debt 5 years ago, okay? We're paying like 0.5%. We'll say we're paying 1%. That's easy. We're paying about $1,000 a year in interest expense on our $100,000 debt. Now, 5 years later, and this is the case overall, the government, businesses have 2 to 3 times as much debt as they did 5 years ago. And now we have triple the interest rate. So instead of having 100,000, now we have 300,000 in debt. And we're paying a higher rate at 3% plus. Instead of paying 1,000 a year, we're paying 9 times higher at 9,000 per year. That exact same example can apply to many small businesses, households, even our government. Those Fed governors may want to run down to their local Bed Bath & Beyond. That is, before they close it, because Bed Bath & Beyond today announced they're closing 150 of their stores and laying off a significant number of employees. That is a staple home product, home good type company. That is not a good sign for the overall economy. And they're just one of many of the retailers that are reporting significant problems. I don't decorate from Bed Bath & Beyond, but I welcome you to join me here in Ron's Basement. You're important, and I honor the fact that you've given me some of your precious time to come here and talk about gold, silver, overall economic activity, things that we find interesting. If you enjoy my content, please give the video a thumbs up. You can subscribe to my channel, turn on the bell notification, leave a comment in the comment section below. That's where we can learn about you and from you, and you can share this video with anyone you like. According to our government, the employment picture here in the United States is better than ever. Record low unemployment. Now, we got a little information this morning from a company called ADP. They released their new revamped employment survey. It was expected to show a gain of 300,000 jobs. It came in just a little bit under the expectations of 300,000. It came in actually at 132,000. Less than 50% of the jobs that were expected to be created. So I'm just not sure who to believe, the government who puts out their employment numbers, or a major publicly traded company with 400,000 client companies for which they process payroll and are in touch with on a weekly basis. I wonder who has a better feel for what's really going on in the economy. So as the United States Federal Reserve continues with all this blabber about how they have to raise rates, more and more hawkish talk, they better just be careful, because they might incite a major rout in the bond market. As rates go up, the value of bonds go down, number one. Number two, as rates go up, it slows business activity, which then in turn increases the credit risk associated with those bonds. Things could spiral very quickly. Doesn't this economy make you feel like you're in a fun house sometimes? Like in the room where there's a smoke machine going and a bunch of mirrors and you're disoriented, you just know things don't make sense. Well, I tell you what, when the smoke machine gets turned off and the lights come on in the funhouse, we're going to look over in the corner and we're going to see silver and gold sitting over there being long ignored, but they're going to be shining. They're going to have held their value like they have for thousands and thousands of years, because things aren't getting any better in the world. We haven't even touched on the geopolitical situation, the splintering of the world between the East and the West. Today, I'm seeing news that the Ukrainians are launching major offensives in the south of Ukraine against the Russian-occupied territory. I will tell you, as that situation continues to escalate, and if Ukraine is now attacking the Russian territory, it's just not a pretty situation out there in the world from a geopolitical perspective, from a traditional war perspective, from an economic war perspective. We are in some very uncertain times. And one thing I do know for certain is that has not been reflected in the price of silver or gold. Thank you for joining me today in Ron's Basement. I hope you enjoyed the video. I hope you enjoyed your visit to the basement. Don't forget, you are always welcome here, anytime, from anywhere. And until next time, you be well. Hey everybody, it's Ron from Ron's Basement, live on the log flume with Lily. Lily, say hi.